Hey guys, welcome back to the first ever midnight trade session where I try to teach you guys about options while managing a live two contracts right now. I am up around 200 bucks. So if this prints, then this episode would have paid me around 200 bucks, which is, pretty good for a few minutes or a few hours work. All right, all right, let's go over the basics first. What is a future? A future is basically a contract. It's kind of like an options contract, but you don't take like there's no data or there's no real time expiration or intrinsic extrinsic value or anything like that. It's just pure direction and expires at 3 months. And then after the 3 months, you take the assigned, like physical collateral. I think it's like 1,000 barrels or some shit, or like MES, which is like follows the spy. You take like 100 shares of the SPX or something. It's something like that. That's how it goes. It's kind of like an options contract, but like less optiony, I guess, or like minus the data, less complicated than an options. All right. All that being said, here's what you actually gotta know. Okay, this is like a crash course. So, in order to buy one, it's gonna take roughly right there, 2,000. Let's just say $2,400. So 2.4K in order to buy one, and they just hold it as collateral. And then each future has its own characteristics. So for the gold that we're in right now, the gold futures, each dollar that it moves up, when it goes from like 41 like 84, 41.84, and it goes up to 41.85, it moves up, like the future itself moves up by $1, but your position actually moves up by $10 for gold. $10 for gold. I have two contracts, so that means for every dollar that gold moves up, I move up $20. That is so important. Just screw that in your head. Every future. I'm gonna look away. I'm gonna look away from my gold contracts. Every future is different. Like the MES right here, it's like $5 per contract. So you need to buy two of them to get $10, and so on and so forth. So gold, you have a little bit extra leverage because it is $10 per dollar on the graph. With that being said, that's like if you want to know what's the most important thing you gotta know, that's it right there. And the fact that they expire on the third Friday of every 3 months, it's on like a triple witching expiration day. So just keep that in mind. How do you determine a good entry versus exit? Okay, entry is kind of like the same as a stock. I got in right here. I'm doing this on a Robinhood Live. Not Robinhood Live. Robinhood Legend. This is kind of fun because it's like my first time doing it on a desktop and stuff. I usually just use the phone. So right now I got in at 41,875. I believe it was a combination of buying this dip and maybe this dip right here, and that's how I averaged it out to right here. So it's kind of just like following the trend, same thing applies to stocks, following the trend and then like just watching it. One thing that is also super important, futures like kind of you air quote have like the option to lose an infinite amount of your money. So a really good habit is immediately set like a stop sell loss, like, and then you kind of like, yeah, so you gotta set like a stop sell. So just do the math in your head. If you're willing to take like a $200-300 loss, do the math, like $10 per point, $200, that's 20 points. Just do that math and set like a stop sell. All right. Now, if you have a little bit of profit and you want to lock it in, I read it from a book. It's like best winner loses or best loser wins or something like that. That instead of just like, oh yeah, my price target it's gonna be like 4205, he's like, why not just move your stop sell up? Like, you know what I mean? Like right now I have it just hovering right here. Maybe it's gonna like do something like this thing down here, and it just like wanders around a bit, and it like shoots up. I don't know. Yeah, you guys can see it. It does something like this, and then it shoots up. Like if you set like a price target, you would have missed this whole freaking move right here. But like if you just moved it up to here, I mean, yeah, you still get closed down here, but like, you know what I mean? It's just like it's just better to just move up the stop loss. So you can get stopped out. It's like, oh, okay, I still make some money, but not as much as if I like just man sold here. But then if this thing explodes upwards, you still get you know, you didn't get stopped out, so it exploded upwards. You get a lot more of that upside. So that's how you determine a good entry versus exit. That being said, I would suggest placing your stop sales along like lines where your trade becomes invalidated. Meaning like if you put it right here at like this neckline of this what is starting to look like a head and shoulders maybe, but if you just put it on the neckline and it is a head and shoulders instead of like a fake out or some shit, then you know you'll get stopped out when the trade is invalidated. I actually really like trading on this It's actually pretty cool. You can see all like the volume and stuff. You see like it's got a lot of buyers down here at 4200.2. Like a lot of buyers right here for some reason. Don't know why. That's pretty cool to see. Let's see if I can. Oh, okay. Oh, that's the line. Gotcha. Should probably move the line up too. Move the line up. Oh shit! I just got rid of my stop sell. I gotta get it back in real quick. Let me just do this real quick over here, I guess. I could do. Yeah, there we go. Okay, I got my 2 stop sells at that 41.95 line again. Okay, so we're just gonna be chilling here. We could take profits if we, just ideally I just want this to get stopped out down here, but then at the same time this could blow off. So I'm just chilling now. What are the best futures to trade? I have not traded enough futures to actually know which one's the best, but I'm most familiar with the MES. That one has pretty good risk to reward and all that stuff. And then now I'm just getting into gold because I don't know, it seems like gold has been ultra bullish lately, and I'm more comfortable going bullish than bearish. So yeah. All right. Oh yeah, talking about bullish and bearish. Right here, as you can see, you could buy limit. Buying means you're bullish, but then you can also sell. You could do like sell. Right now it's like sell stop, but you can imagine it goes up here and you want to do like a little sell order. You could just go on this side, like sell market. You could do that. And right now it won't let me do it because I'm technically in like a bullish thing. All right, I'm gonna quickly look away. I don't want to look away for too long. All right, so right here, let's just say you want to like get in here and then you want to like sell something. You want to sell it, you can just do something like this, and then when the price goes up to 6705, then you'll sell a contract. I'm not doing that. But then also remember, when you're selling and then you want to do a stop loss, you now have to like go up higher over here and do like a stop loss. Holy shit, good thing I didn't do that because this thing is bullish. I might actually buy something here. Let me see if you can just place a trade like right here. Oh, that is cool. Alright. Wow, I didn't even know you could do that, but apparently you can. So I just, if the price drops back here again, I'm gonna buy something. And then you could do something like immediately put like a stop loss right here if that gets triggered. Like, I guess you gotta do something like this. Alright, so now I just put in 2 orders. It's gonna buy if ever reaches 66.96, and then that's gonna trigger, and then hopefully you're like aiming for like a bounce right here, and then it goes back up. Or if it keeps dropping, then you automatically get closed out. But I don't want to do any of these right now. I'm gonna go back to my gold contracts. So yeah, that's basically futures. I would argue it's quite a lot easier than options because you don't have to keep track of like theta and IV crush and strikes and all that shit. It's pretty easy, just trading purely direction, and yeah, that's about the gist of it. That's futures 101 crash course. Good luck out there. Good luck.